Welcome back to Smart Stock Sam, the channel where we break down the numbers Wall Street buries in footnotes and turn them into real, actionable intelligence for you. And today, we are going deep on one of the most talked about tickers in the market right now, Bitmine Immersion Technologies, ticker BMNR. We are unpacking their Q2 2026 earnings results in full, tearing apart that terrifying headline loss number that had retail traders panic selling, and then laying out a clean price target for the week of April 20th through 24th. But before we dive in, and I want you to stay with me for every single data point, because this story gets better as it goes. If you are new here, hit that subscribe button right now, because we publish deep dive analysis like this every single week, and you do not want to miss what is coming next. Now, let me give you the 30-second map of where we are going today, because this analysis covers a lot of ground. We are going to start with the strategic transformation happening inside this company, the pivot that completely changes how you value it. Then we will dissect that scary $3.82 billion net loss and show you exactly why sophisticated investors are not panicking. After that, we will look at the revenue engine powering the new BMNR, the treasure chest of assets sitting on their balance sheet, and the very specific math that makes this a leveraged bet on Ethereum without the margin call risk. We will then walk through the macro catalysts lining up right now, the $4 billion buyback creating a floor under this stock, a technical setup that looks like a coiled spring, and a valuation mismatch so glaring it almost seems like a mistake. And we will cap it all off with your specific trade ladder for next week. Let's go. Here is the core thesis, and I want you to really hear this before we look at a single number. BMNR is no longer just a crypto miner. What we are witnessing in real time is a complete metamorphosis, a transition from the high-cost, hardware-heavy, brutally competitive world of proof-of-work mining into something far more elegant and far more scalable, a leveraged Ethereum staking vehicle. Think about what that actually means. Instead of burning electricity around the clock to compete with every other miner on the planet for a block reward that halves every 4 years, this company is now earning yield on a treasury of digital assets by simply participating in the Ethereum network. That is not a tweak to the business model. That is a completely different business. And when you rebuild a company from scratch around a $5 billion asset base, you create what I call a massive value floor. Add the recent NYSE uplisting to the big board and a $4 billion share buyback authorization, and what you have is a springboard being built beneath this stock. The question is not whether the spring loads. The question is whether you are positioned when it releases. Now let us look at the actual numbers, because this is where the story becomes undeniable. BMNR's legacy mining revenue collapsed by 86% year over year, falling to just $219,000 in the quarter. If you saw that number in isolation, you would close the tab. But that is exactly the wrong way to read this report. Look at the other side of the ledger. Native Ethereum staking revenue surged by 633%, hitting over $10 million in a single quarter. Staking now accounts for 92% of total corporate revenue. The company has not just shifted, it has surgically replaced a dying, expensive, commodity-driven business model with a high-margin, predictable, scalable digital yield engine. The mining division is basically a footnote at this point. The new company is the staking machine, and the staking machine is firing. But here is where I need to stop and address the elephant in the room, that headline net loss of $3.82 billion. If you only read the headlines, you saw that number and probably felt your stomach drop. Here is what the headlines did not tell you. 99% of that loss, $3.78 billion out of $3.82 billion, is an unrealized mark-to-market loss. It is a paper adjustment, not a single dollar of cash leaving the business. Under new accounting rules, BMNR is required to mark the value of its Ethereum holdings to market every single quarter. Because Ethereum pulled back from its 2025 all-time highs, the reported paper value of those holdings dropped. the accountants are required to book it as a loss. But here is the thing. While the accountants were busy writing down assets, the actual operational revenue of the business was growing by 633%. The cash engine accelerated. The paper loss is accounting noise. Do not let accounting noise make your investment decisions for you. Now let us talk about the engine producing that yield, the MAVAN Staking Engine, because this is the mechanism most retail investors have not fully priced in. Currently, BMNR has 3.33 million ETH deployed into staking operations. At a 2.89% annual yield, that translates into an annualized revenue run rate of approximately $212 million. $212 million of high-margin, recurring, network-validated revenue. And here is the thing that should be making you lean forward in your chair right now. They are not even at full capacity yet. The company has a clear roadmap to reach a $310 million annual revenue target once their remaining treasury is fully staked. And what does that mean in plain English? It means this revenue line is going to keep growing without the company needing to spend a single dollar on new hardware, new energy contracts, or new facilities. It grows because the network grows. Let us now look at exactly what is sitting on that balance sheet. Because when you see the full picture, the current stock price starts to look almost surreal. The total net asset value of BMNR is $10.7 billion. The company, chaired by Fundstrat's Tom Lee, one of the most recognized macro strategists on Wall Street, operates the world's largest corporate Ethereum treasury. We are talking about nearly 5 million ETH, hundreds of Bitcoin, and over $700 million in cash. They also hold a moonshot portfolio of strategic positions, including stakes in Beast Industries and 8Co holdings. When you buy shares in BMNR, you are not buying a speculative bet on some future technology promise. You are buying a fractional interest in a massive, professionally managed liquid vault of the world's most important digital assets. That is the floor. That is what makes this story so structurally different from typical crypto equities. Now here is the mathematical relationship I want you to really internalize, because this is what makes BMNR so powerful as a trading instrument. Management's stated structural goal is what they have internally dubbed the Alchemy of 5%, owning 5% of the total global ETH supply. They are currently 81% of the way there. And what does that mean for you as an investor or trader? It makes BMNR one of the highest beta proxies for Ethereum price action available on a regulated exchange. The math is clean. For every 1% move in the price of ETH, BMNR's underlying asset value shifts by approximately $100 million. This is a leveraged exposure to Ethereum, but without the liquidation risk of a futures contract or the custody risk of holding crypto directly. You get the upside leverage through a regulated NYSE-listed equity. If Ethereum makes a sustained move higher over the next 12 to 24 months, and ask yourself, what is the realistic probability that the number 2 blockchain network by market cap goes significantly higher over the next 2 years? The effect on BMNR's asset base compounds aggressively. Let me now walk you through the macro and corporate catalysts that are beginning to align simultaneously, because timing matters enormously in a setup like this. On April 9th, BMNR completed its uplisting to the NYSE Big Board. This is not a cosmetic move. It unlocks a dramatically expanded pool of institutional capital and puts the stock on the radar for index inclusion committees. When an index adds a stock, passive funds are forced to buy. That is mechanical demand that has nothing to do with opinion. Then, on April 17th, we saw a broad risk-on rally across global markets as geopolitical tensions eased with the reopening of the Strait of Hormuz. ETH moved over 5% that day and pulled BMNR with it. And when you look at the institutional names already circling this stock, firms like ARK Invest, Peter Thiel's Founders Fund, and Cantor Fitzgerald, you have to ask yourself one honest question. Do these organizations do their due diligence, or do they blindly chase trends? The smart money has already done the work. They are already at the table. Now, let us talk about the single most underappreciated line item in the entire BMNR story: the buyback. The board recently expanded their share repurchase authorization by 300%, clearing them to spend up to $4 billion buying back their own stock. Think about what this actually does to the stock's risk profile. It creates a structural bid beneath the share price. As long as BMNR is trading at a meaningful discount to its net asset value, and right now it absolutely is, the company can and will keep deploying capital to repurchase shares. Every share that comes off the market makes the remaining shares you hold more valuable. The buyback does not just limit downside, it accelerates the path to a value re-rate by compressing the float. This is management putting $4 billion of conviction behind the same thesis we have been building all video long. Let us go to the chart, because the technical setup here is almost too clean. BMNR is currently trading above all major exponential moving averages, the 20, 50, 100, and 200-day. Price action has carved out a textbook double-bottom base over the last 6 months, and the stock is now pressing directly against the neckline at $23.40. A high-volume close above that level on any given day would confirm a major 6-month trend reversal. The RSI is sitting at a healthy 56, not overbought, not oversold, just building energy. And we have a fresh bullish MACD crossover in place. The momentum is shifting. The question is whether the bulls can defend the setup long enough for the catalyst to arrive. And if the technical setup is the spark, the short positioning is the gasoline. We currently have over 36 million shares sold short, but the days to cover ratio sits at just 0.81, dangerously, almost recklessly low. If BMNR clears that 2340 neckline on volume, short sellers have less than a single trading day to cover their positions before the available supply dries up. We also see nearly 40% of volume transacting in dark pools, a pattern that often signals institutional accumulation nearing completion before a price discovery event. Layer on a massive call wall clustered at the $23 strike, and you have the mechanical ingredients for a violent, rapid move higher. And for the value investors watching, let me give you the number that puts the entire setup in perspective. Despite holding over $10.7 billion in liquid net assets, BMNR is currently trading at a price-to-book ratio of approximately 0.83 to 0.9. The broader crypto and digital asset equity sector is trading at 16 to 21 times book. You are currently able to buy $1 worth of Ethereum and a high-margin staking business for less than 90 cents. This is the kind of valuation mismatch that either corrects when the market discovers it, or when a $4 billion buyback forces the market to pay attention. Either way, the math does not stay broken forever. So here is your specific actionable trade setup for the week of April 20th through the 24th. Your primary entry zone is between $22.40 and $22.95. Look to accumulate on any retests of the 20-day exponential moving average. You have a defined support level at $22.60 and a rock-solid floor at $20.74. To the upside, once we clear the 2340 neckline and the recent swing high at $24.11, the first measured move target brings us to the analyst consensus average of $33. In a scenario where Ethereum pushes decisively toward $3,000 and the short squeeze triggers, a run toward $50 is structurally supported by the asset math. Know your entry, know your levels, manage your position size. Before I give you my final thoughts, I want to be transparent with you about something important, as I always am on this channel. Everything discussed in this video is for educational and informational purposes only. It is not financial advice. I am not a licensed financial advisor, and this analysis should not be construed as a recommendation to buy, sell, or hold any security. Investing in individual stocks and digital assets involves substantial risk, including the possible loss of your entire principal. Always do your own research, understand your personal risk tolerance, and consult a qualified financial professional before making any investment decisions. Past performance of any asset or company discussed does not guarantee future results. The financial markets can and do move against even the best researched positions. Here is where we land on Bitmine Immersion Technologies. This is a company that has successfully completed one of the most dramatic business model pivots in recent financial history, transitioning from a declining legacy mining operation into a world-class Ethereum staking vehicle backed by nearly $10.7 billion in net assets, a $4 billion buyback program, a growing cash flow engine with a clear path to $310 million in annual revenue, and a technical setup coiled for a move the moment price clears its resistance. The downside is structurally protected. The upside is legitimately explosive. The institutional names are circling, and the market has not yet fully caught up to what this company has become. This is the definition of an asymmetric opportunity, and the consensus on Wall Street remains a strong buy. Now here is my question for you in the comments, and I genuinely want to read your answers on this one. Given that BMNR already controls over 4% of the global Ethereum supply and is 81% of the way to their 5% Alchemy goal, do you think this type of institutional accumulation of a digital asset at this scale actually increases or decreases systemic risk in the broader crypto market? Drop your thoughts below, because this is a conversation worth having. If this breakdown gave you value today, if it saved you time, helped you see through the noise, or gave you a cleaner framework for thinking about digital asset equities, please hit the like button. It genuinely helps this channel reach more people who are trying to invest smarter. And if you are not subscribed yet, now is the time. We are building something real here at SmartStockSam. Deep, honest, number-driven analysis every single week. Hit subscribe and ring the bell so you never miss a drop. And if you really want to support the work we do here and help us keep going deeper on these stories, you can send a super thanks directly through YouTube's support feature right below this video. Every contribution goes directly back into the research and production that makes content like this possible. I read every single one, and I appreciate each of you more than you know. Until next time, stay sharp, stay patient, and I will see you in the next one.